It's Matt from Invexor Trade, and today we're going to be giving you a lesson on Fibonacci extension targets. A lot of people will get confused or will use one style of Fibonacci where it's actually more powerful to use two together. So I'm going to use all about once you've found that trade, once you've placed that trade, where should you put that total profit? So I'm using DAX again here on Germany, minute 15, hourly 1 time frame. And just to keep it like really clear, I'm looking at once you find a reversal, the entries could be minute 1 it works, minute 5 it works, daily it works on all time frames. I'm going to show you a traditional way and the way that we can do it to increase our probability of finding where is a good place to take target and where price likes to go to. So the first point here, I've got a low in the market. That's an inverted head and shoulders pattern, referred to our chart pattern lesson. So we've got a low and the price comes up. We've got 1, 2, 3, 4, 5, and then it comes back down. Doesn't matter too much about that. What we're looking for is the first significant pullback after a rally off the low. Okay, so it comes down here. Obviously, it shoots where you can see that. But what we're doing, we're assuming at this point, we're not going to concentrate because we've already done a video on Fibonacci entries. We're just looking for the target. So what we do, if you go in here on TradingView, and again, it works on MetaTrader and the other platforms, we've got two tools. So a lot of people, a lot of traders will have a debate over which is the best. So I kind of thought, well, if they're both good and they've both got their values, what we need to be doing is using them both and looking at where there's an area where they might both meet up. And we'll let the others, argue about which is the best, and we'll just use it to our advantage. So the first thing I do is Fibonacci retracement tool, but we've got our targets on. I put the 0 at the first pullback and 100 or 1 at the peak. Now, we did cover this in the other Fibonacci lesson, but just in case you haven't watched that as yet, the levels that we've got are 0, 0.114, and I'll just show you because that isn't a standard one. If I want to add that in, right click, settings, and it comes up here. So I can edit in here and OK. All right, so I can just, add that one in, take that one out. We'll put these. So I'll read them out to you, but 0.114, 0.236, 0.34, 0.5, 0.618, 0.707, 0.764, 0.91, 1.13, 1.272, 1.414, 1.618, which is going to be a key, 1.786, another key, 2, 2.72, 2.414, 2.618, and then it comes up to 4.236 at the top. These are decimal points on TradingView, but you can change it as a percentage. So where 1 is 1, that's actually 100%. 2618 is 261.8%. So you get the idea. 0.5 is 50%. But we're only looking for the extension for the target. So we would buy in here. Okay, we put 0 or 0% or 0 decimal point at that first pullback. This is the technique I'm going to call the slingshot. 100 goes at the top. Okay, and then it gives you some targets. First key one, I guess, is 1618. So some traders will just use that. Others will just use the next tool, which we're going to combine. So this is really important. You know where to put them. So on this Fibonacci retracement, but we've added the extension levels in. It's a slingshot. You use 0% here and 100 at the top. The next one is extension. So when you click on it, you put your first click at the very low. Okay, the low of the move. Then it comes up and you put it at the high, where this one is the 100%, and then you pull it back, again similar to slingshot, but you put the 0 at the bottom there. So some of the things I'm looking for, the key levels I want to be looking at on the extension is 100. It will normally, nearly always, I can't say always, but nearly always go to 100, if not 1618. Okay, so that's a key level, and this is a key level. You can see that's a key level because it actually hit that exactly and then sold a bit or formed key resistance. But I don't know it's going there at the first point. So what I want to do is using these levels. I know that these levels are 2 key levels. Okay, 100, because the 100 extension is the same again. Then the other key levels you'll see, and it's not by coincidence, this is where the debates come from, what's over better. If I put a mark here, I normally look for 1618 to 1.786. And you will see that I get a reaction. So there's a first bit of a reaction come down. Okay, and that's generally, using this technique, is generally a sub 3 of a wave 3. Okay, so now all of a sudden I've got this box, but I could just use that. But of course, the most powerful bit would be to combine the 1618 with the 100. Okay, that gives my first target. Okay, there's a first real target. So if you're getting in here, even if you're getting slightly late, you're at 11,800, 11,900, and you're going up to 12, nearly 1,000 pip move. Okay, next one. So that's the first box. That's the first total profit. So if it helps you, then clearly write that in there for yourself. TP1, total profit 1. Okay, the next one is we'll look for the 1618 and the 2.618. Okay, and again, look at that. The resistance again is absolutely key. It shows you the level. So what we do, TP2. So now we've got 2 profit target areas. So that's using that, you know, from all the way down here, massive areas, and it works all the time. Next one, I'm just going to go low. I'm going to show you a downtrend now. So you can see both ways. The first wave, so I had a wave, let's just call it a wave 1. It could be an A. We're not going to, you know, lose in sleep. Just call it a wave. First move down, wave 1 down, and it retraces. So using our slingshot with the retracement tool, I want to put the 0 at the top of that retrace, and 100, okay, at the bottom of the first wave 1. So wave 1 bang. The target, if you remember, using this strategy was 1618 to 1786. And look at where price went. So if you're getting in here at 13,300, it goes to 12,300. 1,000 pip. You know, very good. You just got to practice these because they're so powerful. And, you know, when live trading's happening and there's money on the line, your psychology goes. You know, you might start thinking, oh, you know, if you're in profit, then you're like, amazing, you know, I made 300 quid in an hour, fantastic. But this is where, if a robot, obviously algorithms do better than humans because, you know, they're just focusing on the target and they make a lot more money. If I do the next one then to add this to it, so start 0 point would be at the beginning of the move. Then the first point comes down and then you retrace it back up. Okay. So just to combine some of these with you, we would, again, in this one, are there any, you know, there's not a huge amount. First one, I would say, and it gives you a bit of a wide range, but again, you know, the reason why I do it, in one instance, you'll have the one tool is better. In the other instance, the other tool is better. So what we'll say here, and again, sometimes we might get more profit, sometimes less profit, but this is probability, is going to go between the 100 extension of that and the 1618. And again, you'll see it. It's formed it perfectly. You know, if you're lucky enough, it comes down. You see the expansion tool. You know, if you held your nerve, then it comes all the way down now. And you could argue you would use a 261 there, and then this 261. Okay, there's probability areas. And again, you would have picked the bottom there perfectly, but purely combining the 2 Fibonacci techniques. Again, here we'll just do another example. So start this time with the expansion. So pick the low, then it comes up. So you click on the first point, then you look for the retrace. Okay, so you've got the first target, then we click on here. So we use our slingshot. So this time we'll start on the 0 there, 100 at the top. I'm just going to put it this side just to make it clearer. So target 1 would be, again, we're looking for minimum 100 extension. Could go to 1786 there. Should we then have gone higher, we could have then used a combination of the 1618 and the 261. You know, I don't know if it went there. Let's see. Hasn't gone there yet. Nope, still short there. So again, TP1 you could write in these. We didn't write it in here, but you could have a TP1 in this box. You could have a, let's put it in that box. And you've got a TP2 in this box. Okay. Should you decide to hold it? For me, I'm very happy to take the TP1. You've got, again, you would enter, say you entered even slightly lower, say you entered at 12k, you know, crazy. This is an hourly 1 chart, but you've got a 1,000 pip move there. Just going to do it again here for you, just so you can see. Question mark here, really, whether that's the first pullback. I guess it is. You can see again, you've got inverted head and shoulders pattern, which happens quite often. So again, using this first move up, you could say is there. I mean, I actually think this is more of a 1, 2, a 3, 4, 5, and then a 2 of some sort before we go up. So I would probably prefer to use that. But if we, you know, we use this just for now, we might have a look at that in a minute. But let's just use this one for now. The first pullback, combine it. Okay, what we're looking for is again where they line up. So minimum, we're looking for the 100. Okay, so it should go to the 100 as a minimum. But then we look to the 1618 and the 1786. Put a line in. Can you see how much consolidation happens there? Really, really big. Really, really powerful. The next one above that, 1618 to the 261. And can you see, it's not a surprise that you are getting all the consolidation in those areas. We could then, it's too much. I don't really like this third box. Probably too much of a gap. Very interesting how that has now formed. You see when they align, it's because there's so much uncertainty in the market. I mean, look at the, that's then gone on to form huge area of consolidation. You normally get this consolidation happen when these Fibonacci's align, and that's why you just want to hold your profit till it gets there. So again, we were just marking the box, and you can do this in advance. Really, what you should do, what we should all be doing, is placing a trade, limit loss, stop loss, and walk away. Don't even look at the screen, but it's the temptations when you've got hundreds of pounds of profit or thousands of pounds of profit. The temptation is to then think you can outsmart it or do more, or you're worried. Actually, you want to protect your profit. You don't want it to then suddenly just drop, because again, let's look at what happened before then. This is January, February, big drop in the market, came up, consolidation, bang. But hopefully, you can see that the just by combining the two tools, it will give you your total profit. Seems too easy, but that's what happens. Is it is. You just need the confidence to use it. So what I want you to do, go away, find 20 trades, at least 20 trades, back test it, go and have a look, get your total profit. It just needs to become second nature straight away. Right, I'm entering a trade, where's my total profit? Bang, leave it there, walk away, or put a limit loss, happy days. So please go away. That's the lesson for finding targets with Fibonacci. Go away, put this into practice, find 20 back tests, and then report back.